Hello, welcome to the European Open briefing for Tuesday, January the 10th. I'm Rafi Bajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we saw the dollar extend yesterday's gains in today's Asian trading, although early in the European trading, at the start of European trading, the dollar did pair some of its losses. We had some relatively hawkish comments yesterday from two Fed officials, Eric Rosengren and Dennis Lockhart, both of which supported a faster pace of rate increases in 2017 than what we saw in 2015 and 2016. The big mover yesterday and today, of course, is oil. Yesterday we saw oil prices slump by almost 4% on signs that US output is recovering, and also on concerns on whether or not Iraq will comply with the OPEC and non-OPEC deal to cut output, because latest figures show that Iraqi exports hit record levels in December. The pound, on the other hand, is stuck near its lows. It actually hit a fresh 11-week low earlier today. The euro is doing relatively better. It's back above the 1.06 level, and gold is also up today, mainly on the back of that risk-averse mood that we have in the markets today. So let's start with the dollar-yen pair. We can see that dollar has been sliding since yesterday. It hit a low of 115.19 before rebounding around 115.85. The main item on the investors' agenda is Donald Trump's, which is of course, U.S. President-elect. He will give his first press conference tomorrow since winning the U.S. election back in November. So markets will be carefully looking at what he's going to say or what he may reveal about his economic policies once he comes into office later in the month. We saw very little impact from fairly upbeat comments by two Fed officials yesterday, Boston Fed President Eric Rosengren and Dennis Lockhart, Atlanta Fed President. Eric Rosengren said he sees 3 rate hikes in 2017. Dennis Lockhart said he only sees 2, although overall both of them sounded relatively positive on the U.S. economic outlook. So for now, the investors are mostly concerned about what Trump will say tomorrow, and of course we're seeing a little bit of profit taking given the recent gains for the dollar. Oil, on the other hand, yesterday we saw it hit a 3-week low. It's steadied now. It's slightly firmer today. Both US WTI and Brent crude are up around 0.6% at the start of European trading. On Friday we had the latest oil rig count in the US, which saw another rise in the US rig counts, indicating that US output is on the up, especially now that oil prices have recovered from last year's lows. So obviously that's helping US producers to raise output again. But also hitting oil was reports that Iraqi exports hit record levels in December, and that's just 1 month before the oil price deal comes into effect. So that's raised some concerns on whether or not Iraq will comply with that deal that we saw at the start of December. If we move on to European currencies, the euro is doing rather well this morning. It's up above $1.06, and that's mainly on the back of a softer dollar and of course the pound weakness. The pound continues to come under pressure. It hit an 11-week low of 1.2110 at the start of European trading. Markets are pricing in a hard Brexit, following those comments by Theresa May on Sunday, where she said she will prioritize immigration and of course leaving the jurisdiction of the European Court of Justice. So that means it's unlikely the UK will retain access to the single market once it leaves the EU. Although yesterday Theresa May did say that they try to give some reassurance to the market, saying that hard Brexit is not inevitable and that markets shouldn't overreact. But that's had little impact on the pound. It's currently trading around 1.2118 dollars. If we move on to the Australian and New Zealand dollars, both of them posted an impressive rebound yesterday. The Aussie was up by around 0.7%. The Kiwi closed up by 0.9% against the US dollar. The Aussie did fall a little bit after slightly disappointing retail sales figures out of Australia, which showed that retail sales were up 0.2% month on month in November, against expectations of a 0.4% increase. Though on the whole, both currencies have been doing relatively well against the US dollar since the start of 2017. Before we go, let's have a quick look at gold, because gold did reach a 5-week high, $1,187 an ounce, and this is, of course, we do have a bit of risk-averse mood, and of course the dollar's retreat this week is helping gold prices edge higher, especially after the recent losses due as a result of the dollar rally. Let's have a look at today's calendar now. We did have some Chinese inflation figures. Chinese CPI came in slightly below expectations at 2.1% versus forecasts of 2.3% in December. The big surprise were producer prices. They shot up 5.5% versus forecasts of 4.5%. That's mainly due to the weaker yuan and, of course, rising commodity prices, which is boosting import prices in China. We also had retail sales in the UK from the British Retail Consortium. They showed retail sales were up 1% in December, and we've got the Australian figures there as well. Coming up later today, we don't have much data out of the Eurozone or the UK. In the US, we're only going to have the JOLTS job openings, and we've got building permits out of Canada. So on the whole, it's looking like a relatively quiet day in the US session. That's it from me. Thank you very much for watching, and have a great day.